Hello from Trend Signal for our review of the data and events of the week beginning the 5th of October. On Monday morning, the Far East markets set the tone for the moves early on, following the sharp reversal in US equities post non-farm payroll on Friday. Tokyo, Singapore all up at 1.5%, a holiday in China, in fact, a holiday in China for the first 3 days of this week being National Day. Markets last week, quite steady. Nothing too much to report on the FTSE. It's up about 20 points on the week. But the Dow and the S&P were both up just over 1%. The DAX still struggling in the wake of the VW emissions scandal affecting the automotive industry there. The Nikkei also continuing to struggle, although a lot of this has been reversed Monday morning, of course, but 155 lower last week on the Nikkei, about 0.8%. Dollar had a mixed week, really, although fell sharply on Friday on the back of the number. Euro dollar was just up 20 on the week, which is a very small move. Cable was unchanged. Dollar yen still stuck in that very narrow range, in fact, off 67 points or pips last week, which is just over 0.5%. The Aussie dollar, that counter-trend trade continues as the Aussie rallies, a very modest 43 pips last week. Big other moves in the precious metals. Gold, that was despite its rebound on Friday, it was down $7 on the week. Brent crude was unchanged. Still the big moves in platinum palladium as a result of the VW emissions scandal. Platinum down a further 4% or $37 last week, whilst palladium, which could be the beneficiary, they suspect, up $35 or over 5.4%. So a significant difference between platinum and palladium. Also, VW falling below $100, 100 euros a share, I should say, on Monday morning. Although last week it actually fell 13.5 euros, which is 11.5%. So not good for the automotive industry, as I say. Friday's number, obviously, the big news was the unemployment news shocker, as I would describe it. Not only was October of 142,000 jobs a miss. The previous month was revised lower. September number was revised to 136,000 from 173,000. So in total, I guess you could say the miss over 2 months was a whopping 96,000 jobs. The implication of this poor number, well, immediately, I guess, cast doubts over whether the Fed will raise rates at all this year. Certainly October is off the cards. A report from the FT, Market Watch, all really pointing to the same conclusion there of expectations now moving in some quarters to early 2016 on the back of this news on Friday. And I think some say that the markets are regarding March as a likely month for rates to rise. But I think that's trying to read too much into the tea leaves, and it really does depend on the November payroll report. So we've got 4 weeks to wait for that, of course. Interesting moves in the equity markets. Knee-jerk reaction was a sharp initial sell-off, which you'd expect following a poor number. Rallied pretty much following the opening, though, on Friday, and I think it's largely as traders reassess the likelihood of a rate rise, of course. So a little bit obvious even before that, but the overwhelming view, obviously, that rates would not rise, certainly in October and November, or possibly this year, I guess, has cheered the markets to a certain extent. At some stage, the pill will have to be swallowed, but for now, I guess you could say that the doctor can't decide whether it needs administering. Anyway, for now, it's for equity traders, I guess you could say it's out of sight, out of mind. Gold, well, that rallied on the back of it. No inflation, no currency jitters. So why the rebound? Most of it was down to the impact from the US dollar, which reacted very badly to such a poor number. So all dollar-based commodities really immediately got bid as the currency was marked sharply lower. For example, the euro went from 111.60 pre the number to a high print of 113.20 or higher, I've heard in some quarters. So there we go. In light of everything else, let's have a look at the what data we're expecting this week. We've got non-manufacturing PMIs or service sector PMIs here in the UK. We've already had that out. In fact, if I just refresh that, we can see that it was a miss at 53.3, expected at 56.4. Still above 50, which is important, but nevertheless demonstrating another miss in an economic release, which there were plenty of last week, I have to say. Other than that, Mario Draghi's speech this week, and we got a number of interest rate decisions from Japan, Australia, and the UK, and also the FOMC minutes from the meeting a couple of weeks ago. So let's just go through it, the most important ones at least. First of all, let's focus on the Reserve Bank of Australia rate announcement is the first one this week. We're expecting no change there. The Aussie dollar recently hit a 6-year low following as the China angst continues, I'd say. We have a modest counter-trend move at the moment, although the Aussie obviously remains vulnerable to any Chinese data, or any poor Chinese data, I should say. Fortunately, China has a 3-day holiday, so there won't be any pressure for now, I would assume, on the Aussie. Other news, we've got the ECB President Mario Draghi speaking at 6 o'clock on Tuesday evening. That potentially can be market moving, so if you're still trading at 6 o'clock in the evening, that is something to watch out for. Make sure you've got in your diary. The second central bank policy meeting this week is from the Bank of Japan. No change expected there, although the economy has hardly recovered since the unprecedented amounts of QE, quantitative easing, were announced. Bank of Japan blames various areas. Certainly the emerging market is one area that is a valid claim. The chance of any action this month, I guess, is quite low, but expect some further monetary policy extensions, enhancements, whatever you want to call it, more likely in November's meeting. But the yen, for now, I think will remain stuck in its tight range that it's in at the moment, unless they do surprise us on Wednesday morning. Next bit of news, I guess we can jump to Thursday, really, which is our own Monetary Policy Committee meeting here in the UK. Again, like the other two policy meetings from the Australian and Japanese central banks, we expect the MPC will very much keep rates on hold, certainly following recent developments, both domestically and globally. The move in the US and with the very weak payroll data on Friday, and rate expectations have definitely been pushed back at least a couple of months. I think it's highly unlikely that we're going to get any rate rise in the UK. Well, it's going to happen after the US has raised rates. So that's, again, it's going to be sometime in the spring or even later in the UK. Had some reasonably strong performance in the labour market, wage growth at a 6-year high of 2.9%, but I think it's likely that it'll be another 8-to-1 vote to keep rates where they are. We also have the minutes out at the same time, so it's always been interesting to hear actually what the policy, the MPC committee were deliberating about as to what made up their minds, etc. That's it on the UK side. The FOMC minutes, they normally do attract a lot of attention. It is always an interesting event in the calendar month where we try to read the tea leaves again. The FOMC minutes were released 2 weeks after their meeting. The Fed added a new line to their statement highlighting that headwinds from recent global economic and financial developments taken into account. The Fed won't have had much insight into the recent unemployment data, the non-farm payroll from Friday, obviously apart from their own research, which is fairly extensive, but comments may be a bit out of date from where the market is right now following non-farm payroll on Friday. But nevertheless, the FOMC minutes are usually eagerly awaited, so 7 o'clock on Thursday will be a useful one to have in the diary. That's it for major releases this week. Thank you very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.